can see is percentage wins times the dollar average win minus percentage of losses times the dollar of the average loss. So let's look at this case. Remember we said we could possibly make, we'll say 52, and we'll say 62 is the average risk. Okay? So what we're going to do is plug in a bunch of different percentages to see what the numbers come out. Okay? So let's start with 50%. Okay, so we're going to put 0.5 and 0.5. All right? And hopefully by now with the exercise with Dick, you've realized this is a very powerful equation. So we've got 0.5 times 52, 0.5 times 62, negative 5. Okay, so if we're at 50-50, this isn't going to work. Okay? Let's erase some of the lines. Okay, let's go up to 60. 0.6, 0.4. 0.6, 0.4, 6.4. Okay, so as long as this type of trade wins 60% or more of the time, then that type of trade has a positive expectation. So what did I just do? Well, and again, we'll talk about this more during the live event, but how can I put this? What I've just done is I have completely taken the system out of the equation, haven't I? And you know, maybe you're understanding where I'm going with this, and maybe not. And I'm going to talk about this more in the coming weeks, and also at the live event. This idea is going to form one of the key stones in the foundation for the systems we're going to talk about. What I've just done, because think about this, what I've just said is as long as I'm winning 60% of the time, and I'm keeping my losses consistent, my wins consistent over time, this will make money. So does it matter what's going on over here or what the volume is doing, or, you know, if I have an ADX down here, you know, with the squiggly lines crossing and all that, does it matter? No. None of that junk matters. Because it's what? It's all about the numbers. How many times am I winning? How many times am I losing? What's the number that I'm winning? What's the number that I'm losing? So you put this together, and now all of a sudden, you've got a reason to take a trade over here. And this, in my opinion, it would be a better reason than most. That you've got the numbers in your favor. So that going through an exercise like that is helpful in trying to decide on whether or not you're going to take a trade, and whether or not you feel that over time your trades will equal that. What do I mean by that? If you think over time that by taking a trade in this type of scenario where the market has moved down, it's bouncing it's bouncing around inside of a trading lane, and you think that over time, over a certain number of trades that you're going to wind up winning 60% of the time, then is this a viable trade for you to take? The answer then would be yes. Okay? So let's just go ahead and continue this out. We'll see where this particular trade winds up going.